Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week, the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype, right to the heart of the big issues of the day. This week on the programme, we're looking back in order to look forward. The almost 250-year history of the United States stands as a testament to the power of its unique democratic and societal spirit of entrepreneurship. Leading up to the 4th of July 2026, then, UBS is celebrating the Republic's semiquincentennial with a series of reports highlighting prime examples of uniquely American innovation and entrepreneurship that have not only transformed the domestic economic landscape, but also profoundly impacted the world. On today's show, it's a pleasure to welcome from the UBS CIO Americas, Kurt Reiman, Head of Fixed Income. Kurt, welcome back to the programme. It's always lovely to chat to you. And I want to kick off really by asking you about this first issue in this 250 years of US innovation series, of course, kind of pegged to this big anniversary coming up in July 26. It looks at the Transcontinental Railroad. And I suppose the story of the railroad is the perfect example in many ways, right, of what has made and continues to make the US unique over the last 2.5 centuries.
That's right. We are, even today, living through this transformational period in the global economy with the rapid build-out of artificial intelligence infrastructure. If you think about both the data centers and the energy that powers them, and then you think about the applications to, nascent but promising fields like maybe healthcare. And investors are thinking a lot about how sustainable this is, the investment that's going into it, whether it's a bubble. That's a question we get a lot. Just how much demand will there be for AI solutions in the future? And will it be enough to, meet the supply of all the computing power that's going into it? So we're living through today one of these, kind of transformational changes in the economy. And when you think back to the mid-1800s with the advent of the steam locomotive, and then the US being the first country to really go all in on this, in the way of connecting two coasts over nearly 2,000 miles. It's like, this was at the time the big foundational changing, tectonic shifting new technology that people had to adapt to. And we just found as we went through this, all of these corollaries and ways that we might be able to become better investors just by knowing some of this history. And it's also, as you know from the title, From Sea to Shining Sea, it's a bit of a nod to the patriotism and the excitement around celebrating a country's 250th birthday next summer. So what we're going to do is we're going to work from the, kind of the beginning all the way through to some of the more recent big technological breakthroughs, each month hopefully bringing to you a new topic, a new area of focus, and it'll have its own lessons. And it's exciting. This is a really fun report to work on, and I'm looking forward to doing more of these with my colleagues.
Well, yeah, and hopefully we'll get to chat to you about those as they're published. And I find it really interesting, Kurt, this idea of the profitability of looking back to look forwards, because I can imagine that many people think of the work that you do and the work your colleagues do as being all about now. And yet, if we look back to these transformational changes, 150 odd years ago, they touch so many of those touch points. You alluded to it already, but it's not just transport efficiency, timekeeping, the movement of minerals from A to B, innovations in government funding, in bonds issuance. There are so many parallels. It's very important, isn't it, to have that mastery of the past if you want to best advise your clients about how to position for the future?
I would say so. That's right. You bring up a lot of the big changes that we talked about in the report. You can think about before the Transcontinental Railroad. It took 4 to 6 months to get across the country by stagecoach. And then after, it took a week, and the cost was 85% less than before. So it went from $1,000 a person to $150. That's an enormous savings of both money and time. And because of that, because the economics changed so rapidly, you could now access natural resources in the center of the country. It's farmland in the Midwest and the Western US. And let's face it, not only could you reach it at less cost and more quickly, but that farmland, think about goods and spoilage, that mattered. It opened up mining. It was also bringing the consumer products that were manufactured on the East Coast to support these new and developing communities in the central part of the country and in the West. It created towns all along the path as it first pulled the workers and then the settlers to the West. And you can track the shift in the population center of gravity westward that was kicked off by the railroad. And then the tangential effects of, you think about this other really big technology of the time, the telegraph. And so you also had instantaneous communication across the country. And with the telegraph and the rail lines, you had to figure out, as you mentioned, the time zones, because otherwise it would have been just a logistical nightmare. And so you create 4 time zones and consistent timekeeping across the country. So yeah, it's really interesting to see because, here we are talking about all these new industries, all these, flywheels that are being created from the advent of the Transcontinental Railroad. And back then, you can think about, which did better as an investment, the railroad companies or the railroad equipment providers. And it wasn't just by a little bit that the railroad equipment providers did better. It was by leaps and bounds over the course of, the next several decades. So we think about that too today, like, is it the chips or is it the applications or is it the power that goes into, powering the chips? Which investment is going to pay off? So all of this is very relevant. It happened once before, we can learn from it.
Well, yeah, and actually I wanted to ask you specifically about one of those parallels, and you've alluded to it there, and that's the CapEx picture. And there's a really interesting section in the report about this. And it's funny, isn't it, Kurt? You've got to decide, I guess, if a CapEx boom to fund new technology, again, whether that's railroads and rolling stock or whether it's, I guess, LLMs, right? Whether or not it's sustainable or not is a critical thing to think about if you're looking at the prospective success or failure of an investment. And I wonder what, in that context specifically, the kind of CapEx boom side, is this period instructive if we're looking at the same kind of debate which is happening today?
Yeah, so there's like a couple layers of amazing. First is it's amazing that we were able to get data on, business investment, or what we fondly call CapEx, going back to 1870. So I think that's kind of cool. And also as a share of GDP. So there, you have to have the GDP data and you have to have the CapEx data. So nominal GDP, nominal capital expenditures on railroads, like not just on, the overall economy. So the data exists. It's this really cool history of the United States and economic statistics going back to the colonial times. And we show that CapEx on railroads increased. This is just a couple of years after the Transcontinental Railroad had been completed in 1869. So by 1871, it became 6% of the economy. That's the other amazing, right? That it wasn't as diversified economy back then as we have today. So admittedly, maybe that was more of a chance. We were shifting still very much from agriculture and into, more of an industrial-led economy. But that's a lot. And it collapsed epically in 1872. It was the first of the big railroad panics to hit the United States, and it wasn't the only one. And it's a very simple precursor. It's supply of railroad got ahead of the demand. And then losses and bank suspensions just cascaded through the system. And a lot of people lost money. And, of course, that comes back to, having a diversified portfolio and all those lessons. But despite the collapse, the investment in railroads would recover. You'd have another boom into the late 1800s, and then it would kind of stabilize at a much lower share of GDP, something, closer to 0.5% of GDP or 1%. So it didn't just go away. The technology was still viable. It was still very much in a long, multi-decade growth build out, but it got ahead of itself. And that wasn't the first time. It's not the last time that a transformational investment will get ahead of itself. And I think investors today are thinking about this. They're thinking about the CapEx needs of AI and how quickly it's going to be adapted and so forth. But there's one really big difference between AI today and its build out and if you remember back to the late 90s, the fiber optics, and then, in the mid 1800s, railroads. Those are, boom bust cycles. And that is that AI data centers are going to age, and the infrastructure is going to age much more rapidly. Its half-life is rapid. Maybe it's a year, versus the railroad beds that are, multi-decade lifespans, and fiber optic cable, which was put down in the late 90s, is still in use today. So we have to think about, there are some similarities, there are some differences. We might actually need a, longer, more sustained level of CapEx in AI because it ages more rapidly and there are these faster upgrade cycles.
And it's the sort of the question mark then, Kurt, over that more rapid obsolescence of the advances that are funded by the current rounds of CapEx, a reason why UBS, I guess, is more interested also in the sort of course, in the big thematic around artificial intelligence and digitalization broadly, but it's looking at the whole suite, the whole breadth of opportunity, not just in the singular businesses or opportunities that maybe get the most column inches, right?
Yeah, we are thinking about the railroads and the railroad equipment stocks right now, if you want to use a mid-1800s parallel to today. It's the enabling layer, it's the infrastructure that powers all of this, it's the applications that are derived from it. And do we need more of it? Absolutely. The projections for the further build out of, all of these have a long and I think very well anchored foundation here. And so we are invested in this theme and across sectors and across geographies. And in that sense, we get the diversification because we're not just looking at the railroads, right, in one country. We're looking at the AI applications, the AI infrastructure, the power and resources that are needed to get the chips and the water resources, and then all of the technology. So, it's kind of a way to diversify your exposure, but something that we think has a very strong foothold with very much strong investment flows. And you think about like a recent paper that said, the AI applications that we've used so far are, maybe 5% of what's available out there. So a long runway.
Let's look at this slightly longer term time horizon. It's really interesting. If we take a step back, transformational innovation, the kind of things that are dealt with in this report and will be explored in the ones that follow, these critical engines, if you'll forgive the pun, of growth, really since the nation's founding. And these are the kind of perspectives that shape the way UBS thinks about investing and advises its clients. Why does that matter, Kurt? Tell me a bit about why it's instructive to take a moment like the US semiquincentennial, to get that right, to take these kinds of deeper dives. Why does that work for you and your colleagues?
I guess I'd say that you started the year and there was this big question of, is this US exceptionalism, pardon the pun, going off the rails? We can both play at this game.
Touche.
And there's something about that story that I think was worth questioning because the US dollar was at very high levels. And there was some question, I guess, as to whether or not some of the changes that we were seeing in the US's relationship multilaterally were, going to be changed, and what does that mean for investing, and some questions about, taxing and tariffing and what would that do for investors that were buying US bonds. So all very much a, relevant exercise. But I think it's also important that we understand why it is that the US is a large share of the global market cap. Why is it that the US dollar is and will likely remain the reserve currency? And it's some of these bedrock institutional, whether it's the legal system or the ability to try a new idea and go bankrupt, or the super clusters of innovation that happen in big cities like Boston and San Francisco. What is it that is endogenous to the US system that results in these big innovations and this willingness to go on all in and take a big bet? And that's what we wanted to talk about. We wanted to not totally change the discussion away from what I think was a relevant question about US exceptionalism, but to have a bit more of a balanced flavor and understand that there is something unique. And we wanted to explore that. And this has been just a great opportunity with this first installment. And I'm excited about all the ones that are coming, whether it's on electricity or airplanes or DNA or the assembly line, but there's a lot over the course of the last 250 years to write about.
And that's Kurt Reiman, keeping us right on track and bringing us to the end of this edition of the show here on Monocle Radio. Listen again and explore more at monocle.com or follow and subscribe wherever you get your audio. And as ever, you can discover more and find out how UBS can help you by heading over to ubs.com. This is The Bulletin with UBS on Monocle Radio. I'm Tom Edwards. Thanks for listening.